So what is the response so far from energy companies been? And are you purposely targeting ones, say, in Texas who are already aware of the Bitcoin mining thing, or are you going to companies who've got no idea and they think you're fucking crazy?
So the response from energy company has been, okay, yeah, this is solving a big problem, but not loving Bitcoin.
Okay.
And so that's where we're actually, it's really funny. So we just talked with had a meeting with one of the largest energy marketing companies. Marketing in terms of like, marketing could mean a couple of things in the space, but truly like marketing and promotional, type of things. And they said, hey, everything that you're doing is fantastic.
Yeah.
The value proposition is very clear. Can you do it without saying Bitcoin? And so the short answer is yes.
I love that though, without saying it. It's like, that's just a bad word. Just don't say it. We can do this.
You don't need that to sell it.
Yeah, you don't
And
need
so
that.
I'm like, okay, I get where they're coming from, because it's like, you're solving the problems. Just focus on solving the problems.
You could just say blockchain.
There you go. Maybe that would warm them up. I have no idea.
But it works, doesn't it? I suddenly use changing from Bitcoin to blockchain. They're like, oh yeah, blockchain.
You'll be inundated with investments then.
Yeah.
It's been fun because I'm such a passionate person in Bitcoin. So I love talking about it and how Bitcoin like networks solve these problems.
Yeah.
But so it's interesting when people who know how to communicate in the energy industry, they're just like, we don't need to talk about Bitcoin in order to sell this. And so I'm catching up.
So with the tests that you've got coming up, what is it you're looking for? What are like the knowns you're looking for? And what is like the field of unknowns that you're thinking about? Like the unintended consequences of this?
Oh, geez. I think it's really just proving out how we're actually going to be managing all of the flows and ensuring that, things like you talk about, are you taking on price risk?
Yeah.
I think it's just really doing that and scaling up. It's the reliability and it's the volume of the payment. But other than that, no, it feels all very known. So we feel very good about where we are.
But do you think this will change any part of like energy production?
Oh, I think that's why we get really excited about this, is because when you can now, so what's key about this whole thing is it's the payment side is one aspect, but what we're doing is we're decentralizing the whole processing side. So no longer do energy companies need to centralize everybody's meter data onto one database. Now it's all happening in a decentralized way. So you have your own container of data. I have my own container of data. We each own our respective data. And so people get very excited about that, because that is what will allow us, you and me, to have different prices, because we're not sort of forcing the same processing. We're not making changes to one centralized system that then we have to push to everybody. Now we can start to be our own unique operators, and we can get very granular in the pricing. So when you think about the production, now we can give clear signals to solar plants. Now we can help nuclear plants get, the true value of what they're providing every day. So it's everybody in the value chain is now going to be much closer to the value that they provide.
So how big could this be?
Oh, it's huge. It's the whole energy economy is going to move on to Lightning. And that's what we're really excited about. So when I say the energy economy, I'm talking about, it starts with the $4.5 trillion every year that's spent on energy.
Huh?
Yeah.
Hold on. The whole energy sector will move on to Lightning.
Yeah, so that picture I painted of, hey, every node in the physical system will now have its own Lightning Network node. And our software just makes it so that way those Lightning nodes now can talk energy. That's really it. And so they now just are in constant communication with each other, moving funds instantly between each other. So it is that circular economy now happening for the energy industry. And what also gets me excited, Peter, is that it goes beyond that, because then you think of all of the other energy-related products and services. So, one of the common things in the States is, okay, well, you can also buy insurance tied to your energy. Okay, well, throw that on there too. Or maybe if you're somebody who, your job was you put the solar panels up, so you are the installer. Now you maybe can have a choice in the future of, do I want to make a small amount off of the future revenue of that solar farm, or do I want that upfront payment? So now you can start to think of different means of compensating people who have a role in providing the energy in that value chain.
Huh.
I think a really interesting thing that we've not got into at all yet is the stuff you're doing in like terms of the mini grids and emerging markets. I'd really like you to get into that.
This is what Danny was telling me about earlier.
Yeah. So this is super interesting, and I have to give credit here to two people. So one is Kevin Hallinan, who is professor at the University of Dayton, and the other is Dan Snitcher, who is my friend.
Snitcher.
I say is Schnitzer. He's an awesome guy. So a dear friend of mine from grad school, and he's the CEO of a company called SparkMeter. SparkMeter is on the ground in 26 countries today with hardware and software and mini grids. And they do a bunch of other things too, but that's where they really kind of got their start. And so in conversations with both of them, one of the most interesting things that I learned was mini grids during the first few years. So when I say mini grid, I'm talking about we're in remote Africa or any emerging market, and you're basically, here's now a solar panel providing power to a community. But of course, right when those panels get installed, the community doesn't have a lot of organic load that they're ready to plug in. There was no electricity before, so it's not like everybody's lining up to now
using that NutriBullet.
Yeah, exactly. So what do you do? I mean, so one thing people don't fully appreciate is that in parts of Africa or throughout most of the continent, the average price of electricity is 30 to 50 cents a kilowatt hour.
What?
Yeah, so way above what we're all paying.
Yeah.
So talk about energy equity. There's an issue right there. And there's still 1 billion people without access to electricity. So don't even get me started on sort of the shame in that. But here's a situation where there's now access being provided, but the access is hampered by the fact that the electricity is expensive. Now, it's still a benefit because before having no electricity, you prefer to have some because you can charge your phone, et cetera. You can have light at night. So the opportunity here is that in those first 3, 5, 6 years, there's a lot of excess electricity. And so the idea that we had, and Dan and Kevin were instrumental in this, is, well, let's send some Bitcoin miners over to Africa. So we have a couple of partners on the ground, and they're using the excess electricity that exists right at these very first few years to mine Bitcoin.
Huh.
Now, what's happening in that equation is it's not taking anything away from the community, so it's not costing them anything. What it is it's providing incremental revenue to the mini grid operator without any additional cost to them. So here we're mining Bitcoin in Cameroon and Nigeria. The mini grid operator now is they're making additional revenue, so they're able to lower the cost to the rest of the community. And what's neat though is because we're using the Lightning Network, we have an opportunity to pay for that electricity as I sit, here in the United States. So instant payments paying for mining happening halfway across the world. And so, the rewards of course flow back this way, but that's you can think of how can this, so why we're doing this is not because, so at Sonoda, we're not Bitcoin miners. We're doing this to demonstrate what's possible when we open up the energy economy globally and we open up energy markets globally. Because again, going back to my belief in markets, they're not global today because you don't transact energy across borders because of all the cross-border fees. Well, now that can go away.
The really cool thing about that to me is that it's not only just not sort of taken away from the local people that are going to use that energy, it's actually making it cheaper for them.
Mm-hmm. Yeah.
And those grid operators could presumably charge the Bitcoin miners slightly more and almost give away free energy to those people that are local.
Yeah, it completely changes the economics. And one of the really neat things is, our modeling shows that the actual optimal setup is putting more solar, more energy infrastructure on the ground. So you can take sort of the view today, which is let's build the mini grid for the first 5 years. We can always expand it later. Well, now it's no, let's build for 10 years. And so let's actually put more investment in. And it doesn't even just start with, it's not just about Bitcoin mining, it's about productive uses of energy and energy infrastructure. So we're using it as Bitcoin mining as an example, but really it's now somebody in Europe or United States can make a direct investment in energy infrastructure and then have the assurance that they're going to get paid because it's all coming from the Lightning Network. So you're just opening this up to where now you're not constrained in where you invest in energy infrastructure.